What's up, YouTube? So this video is going to be quick and very fast. I want to show you the number one reason you are losing money. I swear, this is because I have actually watched a lot of videos relating to trading, kiniko over the years, and I've seen things that is certain thing that is peculiar to majority of them, and majority of these people that I'm talking about are yet to be successful. In fact, there is a particular guy on YouTube that kept blowing a Profem account over Profem account and Profem account. But me, I'm not here to mention people's name or blast people's or say people are not. But I'm telling you, there are these people. This just one thing. If they can just change this thing in their trading, they are going to be profitable. So I'm going to show you that in this video. So let's go to my computer screen. Okay, so that one secret that I want to show you is the fact that when you have a trend, for example, you have higher highs, higher lows, higher highs, and then you have this retracement happen. A lot of people will just take buy position just like that from here. Okay, they will just take buy position. The problem with this is that the fact that the market retraces here doesn't mean that retracement that is where it's going to stop. Retracement can be deep, can be deeper. It may go deep, so you don't know. So if you let's say you take a buy position and you put your stop loss here, okay, and you take your position and put your stop loss just below the support, the resistance, top supports now, price might just push below before it continue to the upside again. Okay, I may push below before it continue to the upside. So one of the things, so the mistake here is that first of all, you need to be sure that the market is going to retrace at that particular point. Okay, and there is only one way to know that the market is going to retrace at that particular time, and that you know that is to wait for price action formation there. So that's the major mistake that a lot of you make, and the mistake don't only end there. Some people just a lot of people actually take trade like that because some people will still use Fibonacci to confirm that retracement. Okay, take for example this case now. You can see price retrace to the golden zone, and this a lot of reasons for a lot of people. They'll be like, okay, price are retraced to resistance level called support, and then it's a Fibonacci retracement, so they will take a buy position. Another thing that can happen, before I give you an example, another thing that can happen is that you know that markets can actually go up. If you take that position, market can actually go up and then come down to hit this stop loss, then leave weak rejection and then continue. Okay, and this is going to be a week and it will just hit you. So it happens. So this is why you have to wait for the second retracement before it comes. If you just try to buy into a retracement like that, most of the times your stop loss is going to be hit. I will give you an instance. Okay, take a look at this trade. Okay, you see market comes let me just, I'm coming. Okay, so market comes up, okay, and then retrace. Okay, so this retracement now you can see it is it retraces to a particular, okay, just want to show you something. Okay, you can see it retraces to a resistance called support, right? And if you use your Fibonacci tool to check, you'll see that it is likely to be your Fibonacci golden zone. As you can see it is your Fibonacci golden zone, as you can see here. Okay, now the question now is, okay, now that all your setup is ready, the problem now is when you take your position, how do you set your stop loss? So let's say you enter your position. Okay, you don't wait for the second bottom, you just enter your position and then you just move your stop loss right below the support level. This is what is going to happen. Okay, because obviously this is going to be a okay, this is a very big stop loss. So so definitely you want to probably even reduce it to some extent. For people, this is on 4 hour. For people who are trading on lower time frame, the stop loss is definitely going to be smaller. So but for higher time frame trader like me, let's say the stop loss is just below the support here. Okay, this particular support which is now resistance. You can see what happened. The market actually go up, just like I explained to you, actually go up, then retrace, leave the week before continuation. So this is why you want to be extra careful and wait for this second retracement before you take a buy position. If you just see a retracement and buy, you are going to continue to have issues. Let me show you more example, because I've taken so many trades like that. You can see I took this trade, this very one. I removed my setup because I exit early after I see this gap up and the choppiness of the market, so I wasn't pleased, so I closed early. Let me see if I can get more example. Okay, this is another example, although the wick here is is not too big, but you can see that after that retracement, look at what, let's say you take a buy position here and you put your stop loss just below here, it may get touched. Okay, it may get touched depending on, this is on 4 hour. Just imagine this on 4 hour. Okay, you can see the wick. So the wick comes back. So the idea is you want to make sure you wait for that particular retracement to happen. Okay, so that is something I want you to know. Okay, this one you can see weak here, but this one is not harmful. This one is still better. Let me see if I can see my other trades where something like that happened. Okay, this one too, there is no weak rejection, but you can see the market actually got up and then retraces. Okay, if you can just imagine you being, let's say you enter here and then you are already in profit, then you see all this candle, what do you think is going to happen? Panic, emotion, all the psychological behaviors is going to set in, and all these things can impact your trade. So this is why you want to wait for the second retracement, which is going to give you a decent price action pattern to take a trade. Okay, so these are the things that I want you to, this is what I want you to understand. Whenever you see a retracement, you don't just want to jump in. Probably you should just wait for this to happen before you go into the trade. Let me show you the recent trade the trade that I'm in as I'm talking to you now. I entered the trade, I think on Tuesday or something like that. So today is Saturday. So good. The trade is good. Okay, so you can see I have to wait for, after the retracement, I have to wait for the second pullback before I took the trade. I want to see the second pullback before I take the trade. So that's the idea. So if you find this video very helpful, please like and subscribe, and I will see you in my next video.